Have you ever wondered what it would be like to wager $1.6 billion on a market crash? Michael Burry, famously known for predicting the 2008 housing market collapse, did exactly that. His fund, Scion Asset Management, purchased a substantial number of put options against funds tracking the S&P 500 and NASDAQ 100. These options are essentially contracts that give the holder the right to sell the underlying asset at a predetermined price, essentially betting that the price will fall. But this wasn't a small-side gamble. No, Burry had committed a staggering 90% of his portfolio to this bearish bet, making it a central part of his investment strategy. It was a bold move, given the significant gains the S&P 500 and NASDAQ 100 have seen. Yet, Burry, with his track record of strong annualized returns, seemed confident in his position. So, by August 2023, Burry had staked $1.6 billion on a market downturn. But what happened next? Imagine being down 42% on a $1.6 billion bet. That's the reality Michael Burry faced with his short position. Now let's dive into the details. Michael Burry, the legendary investor known for his successful bet against the housing sector during the Great Financial Crisis, had taken a massive short position against the market. He purchased 40,000 put options contracts tied to the Spider S&P 500 ETF Trust and Invesco QQQ Trust, with a combined nominal value of $1.6 billion. However, this bet didn't exactly pan out as he might have hoped. In fact, Burry was down a staggering 42% on his short bet. That's right, he was in the red and the losses were mounting. Despite the nominal value of the bet being touted at $1.6 billion, it's important to understand that Burry only spent around $26.5 million to build this position. But here's where things get even more interesting. The closure of the trade coincided with the release of lower than expected U.S. Consumer Price Index data. This, in turn, could potentially signal a pivot on interest rates by the Federal Reserve. It's a move that can have significant repercussions on the market. As Burry closed his trade, the market was left to speculate. What were Burry's motivations for this massive bet? Was it a calculated risk or a misstep? And what's his next move going to be? The anticipation was palpable, and the investment world was left waiting and watching. Despite the sizable loss, Burry remained a figure of interest in the investment world, but was the $1.6 billion bet as massive as it seemed? Stay tuned as we delve deeper into the story behind this colossal bet. A $1.6 billion bet sounds like a colossal risk, doesn't it? But did Burry really risk that much? Now let's delve a little deeper and clear the air around this figure that's been making waves. You see, headlines can be a bit misleading. Yes, Burry did purchase put options with a nominal value of around $1.6 billion against funds tracking the S&P 500 and NASDAQ 100. However, this doesn't mean he shelled out $1.6 billion from his own pocket. In reality, the actual price paid for these options was significantly lower. The estimates suggest that Burry likely spent somewhere in the ballpark of $26.5 million to build this position. Quite a difference, isn't it? This is a crucial distinction that often gets lost in the sensational headlines. It's also worth noting that while Burry is known for his bold moves, it's highly unlikely that he'd risk over 90% of his fund on this one bet. So, while the $1.6 billion figure grabbed headlines, it may not have been as high stakes as it appeared. As we wrap up, let's quickly summarize what we've learned about Michael Burry's $1.6 billion short. This audacious bet against the market was a significant move, with Burry leveraging a substantial portion of his portfolio on put options against funds tracking the S&P 500 and NASDAQ 100. However, this gamble didn't quite play out as expected. The resulting loss was considerable, with Burry down by around 42% on his short bet. Despite the nominal value of $1.6 billion, the actual cost to Burry was around $26.5 million. Remember, Burry has a history of making bold predictions, some of which have proved accurate, such as the 2008 housing market collapse, while others have not materialized. This latest bet seems to fall into the latter category. While Burry's big short didn't pay off this time, his bold moves continue to capture the attention of investors worldwide. It remains to be seen what his next play will be. Before we end this fascinating journey into the world of high-stakes betting and financial maneuvers, we want to remind you, our valued viewers, of some things. If you found this video insightful and want to stay up to date with the latest in the financial world, make sure to hit that like button and subscribe to our channel. Your support helps us continue to bring you more content like this. And if you'd like to share your thoughts on Michael Burry's audacious bet or any other financial topics, don't hesitate to drop a comment below. We always appreciate your input and engagement. Remember, the world of finance is a constantly changing landscape, and staying informed is the key to success. Until next time, keep watching, keep learning, and keep investing wisely.